Hey everybody, Smart Silver Stacker here. So the price of gold making some big moves over the past two trading sessions. Gold is now over $2,700, a very important psychological level. Every time you hit one of these new levels, 2,000, 2,100, 2,200, it means something. And I think what this means is that markets should be taking this as a major warning that things are not as they should be or not as they seem. We're getting major warnings from Bank of America regarding gold, telling us that it is the last safe haven. There's some interesting news regarding gold bars at Costco as well. A survey that Bloomberg did of these Costcos and how difficult they're finding it to restock their gold bar inventories. But first, before we get into any of that news, let's just take a look at the charts. And yeah, Janos mentions in the chat here that it is a big move in silver today as well. Yeah, we've got 2,700 gold. We've got silver over $33 at the moment. So this is very significant. Again, particularly when we zoom it out and look at the big picture here. So zooming out on the chart of gold, in fact, we're going to switch from a daily chart to monthly here. You can see that really this is a significant move because what we're in the midst of is a breakout from this cup and handle formation that dates back to the 2011 highs. Gold consolidated for over a decade. Then it kind of started to break out in 2020, but it went as high as $2,000, a little over, and then traded sideways for 4 years. But now we are officially breaking out of this pattern. We are following this. We have been following this chart since the breakout back here. But even though gold is now at $2,700, it's not done yet. In fact, if you just take a price target from this chart, gold is headed over $3,000. And that's actually what Bank of America is telling us as well. They've got a new price target for gold. And let's take a look at the silver chart too. At silver, if we return to the daily chart here, you can see that nice big candle on silver today. And, you know, we've been talking about a breakout in silver for many weeks now. It still appears, and I've been calling for a move higher based on this chart, this pattern. So back in February, we had a big breakout in silver. It ran from $22 all the way up to $32. So, I mean, that's a huge gain on a percentage basis. You had a what's called an Elliott wave impulse move higher. You see a first wave, then a retracement, another move higher, then a retracement, and the fifth wave takes it to new highs. In this case, it was new decade highs. This is the highest price that silver had traded at in over a decade. I think you had to go back to 2012 to find a time when silver was above $32. But now we had a bit of a pullback, but now silver has embarked on another one of these Elliott wave moves higher. And you see it's following like a textbook, the pattern, a move up, a retracement, another move up, a retracement. Now we should be breaking out to new highs, which in fact looks like we are at the moment over $33. You can see this is a new intraday high in the silver price. If silver closes above $33, that's going to be huge. That'll be the highest price in over a decade, and it's just going to be the first part of a move higher. I think based on the previous wave, this should take us to $36, $35 in the relatively near future, and that's just getting started. We'll talk about the silver market and what's likely ahead for that because, $36, $35 silver is still incredibly cheap, but this does represent, a big move for silver. Now let's talk about Costco. So Costco, this is a story from Bloomberg about a week ago about their gold bars flying off the shelves even as bullion prices smash records. And of course, gold has been smashing record after record after record this year. Today is just another one of these new record all-time highs for gold. But in this article, they mention a survey that Bloomberg conducted of a number of Costco locations. They say the retailer doesn't disclose much about its gold sales, but this survey revealed how hard it is for Costco to keep shelves stocked with gold. About 77% of surveyed Costco outlets reported that stock bullion bars were sold out in the first week of October. That's based on calls to 101 stores in 46 states. So 77% were being sold out. 77% of the stores were sold out of gold in October. Now, if you're trying to buy some gold at Costco and they're sold out, you can always shop where I shop at SD Bullion. In fact, if you're a new gold stacker, definitely check out SD Bullion before you go to Costco, because you can get a 10-gram gold bar at spot by visiting sdbullion.com/new. You will not find a better deal than spot price on a brand new 10-gram gold bar. I tried to look up what Costco was selling its 1-ounce gold bars for, but I'm not a member, so yeah, I couldn't actually see the price. But look, if you want to get a 1-ounce piece of gold, SD Bullion has these 1-ounce Perth Mint Australian gold kangaroos and gold nuggets on sale for $40 over spot. That would be my pick for stacking gold right now at the moment. Now, let's talk about this warning from Bank of America. This is a headline from Markets Insider. Gold is the last safe haven as treasuries face risks from soaring U.S. debt. That is according to Bank of America. So traders at Bank of America say that you should increase your exposure to gold. They recommend that traders and central banks continue to purchase gold. And they also say that they see gold hitting $3,000 an ounce by the end of 2025. Now, I suspect that we're going to see $3,000 gold way before the end of 2025. We might see $3,000 gold by the end of the month. We'll talk about some developments that are going on this month that could lead to a surge in gold prices. But I had a few things here highlighted that I thought were notable. Said gold is increasingly attractive as other traditional, quote, safe haven assets face mounting risks. That is according to the BofA strategist. Now, what would the other traditional safe haven assets be? Well, that would be the U.S. dollar. Could also mean U.S. treasuries, so U.S. debt instruments. Those are the traditional safe havens, but gold, of course, has been a safe haven for thousands of years. The U.S. treasuries and the U.S. fiat dollar in its current form has only been around for a little over 50 years, since 1971. So, it's no surprise that investors may revert to the traditional safe haven asset. Now, they say this is because of potential problems in the U.S. debt market. They say gold looks to be the last safe haven asset standing, incentivizing traders, including central banks, to increase exposure. That was this past Wednesday. And now they say that there are concerns over U.S. funding needs and their impact on the U.S. debt market. And that as a result of that, the yellow metal may become the ultimate perceived safe haven asset. And again, they say $3,000 an ounce by 2025. Now, this is a projection from the Congressional Budget Office regarding U.S. debt levels. Now, this is the official projection, which paints a much better picture than what is really coming. And yet the official picture is pretty grim. You've got a projection that by 2053, the U.S. debt to GDP ratio will be approaching 200%. It's already over 100%. We're already at the highest levels since the end of World War II. And, World War III hasn't even started yet, although that may be in the cards. Also, this is regarding the deficit, this top chart here. You can see that this blue part, this increasing portion of the U.S. deficit, which they project to increase significantly, that represents just the interest on the national debt. So what the CBO is telling us is that ahead is exploding levels of debt and exploding interest payments on that debt. Now, all of the holders of that debt, as inflation continues to rise as a result of these massive deficits and massive accumulation of debt, which is potentially going to be financed by the central bank, long-term rates and interest rates are going to have to rise to compensate for that. What does that mean? Well, all the holders of existing debt, which is going to be yielding less, they're going to take a huge haircut, because as rates rise, the value of existing debt instruments with lower rates, they go down. So that's not the case with gold, right? If interest rates are moving up, if interest rates are moving down, you can still have your gold. It doesn't directly impact that. Now, maybe you could make the argument that higher interest rates make gold less appealing because it is not yielding. But if you're talking about runaway inflation and then an attempt by a central bank to suppress interest rates, well, gold is exactly what you want to have in such a circumstance. Now, speaking of earning interest on gold, gold is a non-yielding asset, but if you're interested in getting some gold and diversifying your holdings into a form of gold that pays interest, you can check out the Goldback Lease Program. They detail this on goldback.com. It's available through an association, the UPMA, the United Precious Metals Association. You check them out. You can actually get free storage on gold in the form of goldbacks, and they will pay you interest on your gold. So that is something to check out. You don't have to worry about non-yielding gold anymore. If you want to diversify your holdings, that's something that I utilize myself. Now, someone says, we got the prices going down here in the chat, but it doesn't look like it. It looks like we're checking live. Silver now over $33 an ounce, gold over $2,700. The miners doing very well. And, I want to go back to this article from Bloomberg about Costco, because even though Costco has been selling out of gold bars, they mention here later in the article that despite the flurry of purchases from Costco, there are signs that elsewhere Americans are selling their gold. They're cashing in on the rally. New York's pawn shops and jewelers have seen a flood of sellers. Sales of American Gold Eagle coins have tumbled 64% this year from the same time period last year. So they say Costco is just one bright spot. Now that's interesting, because this is what we are observing. I mean, look at SD Bullion. Premiums on gold coins there, $40 over spot. It's low. Premiums across the board are low. And the reason is that despite places like Costco selling out of gold bars, which I think is an interesting, proxy kind of for the average American becoming interested in precious metals, what we're really seeing as gold goes up is Americans at least are selling their gold bullion. Now, what is going to happen when that changes? Because right now, the move up in gold prices is largely the result of central bank purchases. But when retail investors start buying, you are going to see, one, premiums move up, but you're going to see the spot price absolutely explode. Now, why would, yes, people are broke. I see people in the chat saying that. That's true. People are broke, but there is cash on the sidelines. And while people are broke, there are people with cash. And so, yeah, you might see people with, a couple of coins they inherited or grandma's jewelry, selling some gold to help make ends meet. And yeah, that is a sign of the inflation-ravaged economy. But also, look at this. This is the expectations of future inflation from the University of Michigan Inflation Survey. Now, you notice that just recently, expectations of long-term inflation have spiked to the highest level in, they say, over 40 years here in this post. Yeah, U.S. consumers' inflation expectations for the next 5 to 10 years skyrocketed to 7.1% this October, highest level in over 40 years. So you can see that up until now, inflation expectations have been relatively tame. However, they are spiking. So what does that mean? It means people are starting to wake up. And that means that soon, I would not be surprised if retail investors begin moving into the bullion market. And that is going to be the next driver of, the next phase up in the precious metals, when you're going to see gold taking out $3,000, probably up to $3,500, maybe much higher than that. And you're then going to see silver also moving in a big way, I think, because one of the things that happens when gold gets to a certain price level is that it prices a lot of people out of the market. Dropping $2,700 on one coin is not cheap. And so, the alternative You go to buy an ounce of gold, you go down to your local gold shop, you're not a stacker, you're not someone who follows these things, you just think, well, maybe I should get something to protect my purchasing power from my rapidly devaluing fiat currency. And, you see that gold coins are $2,700, but then you go see a silver coin for, $33 or $34. A lot of people are going to start buying silver, and that's when you're going to see silver move in a big way. It's part of the reason silver typically lags gold in a bull market. And so I think that we, are in for much higher silver prices too when retail investors start moving into this market. And remember what happened, last March. I know people have a short memory, but when the banks started to fail, Silicon Valley Bank and others, you had a huge move into physical bullion. Now, it didn't last long because the Fed intervened. They managed to contain that crisis. But it gives you a preview of what's going to happen when inflation starts running out of control, when we have our next financial crisis, etc. There's going to be a huge interest in physical metal, which right now is practically non-existent. I'm sure I'll get some comments on this video that indicate that sentiment is low. Whenever I talk about silver, I get a rash of comments about, oh, silver's never going anywhere. I mean, forget the fact that it's up 50% over the past 2 years. But still, no one is paying attention to this stuff. And in the media, they might start talking about gold now because, it's kind of hard to ignore. But nobody's talking about silver yet. Let's talk about some of the other factors here that are driving the metals higher. Let's change gears a little bit. So we've had Russia recently announce a major increase in their gold purchases. This is a harbinger of the global move towards de-dollarization among whatever you want to call them, the BRICS nations, the global south, the anti-hegemon, whatever you want to call it, they're buying a lot of gold. And it's not just Russia, China, all the BRICS nations, India's loading up on gold. There's a reason that right now in the Shanghai Gold Exchange, gold prices and silver prices are 10% higher than on Western exchanges like the COMEX. It's because they're, bidding it up. They're bidding up a huge premium in these nations. China recently, this is from yesterday, and I think this is actually a major contributing factor to why gold is moving higher right now. This is some of the news that's driving that. GDP in China rose the slowest in 6 years, 4.6% year over year. And based on this, there's likely going to be some new stimulus from the PBOC. PBOC Governor Pan Gongsheng flagged the real estate and stock markets as key challenges in the economy that require targeted policy support. So China's already announced a large stimulus program, but it's about to get a lot bigger because, this whole global debt-addicted economy thing, it's a global phenomenon. This is not relegated to the U.S. All of the nations that have accumulated these massive levels of debt, of which, China is included, they're addicted to low rates and easy money, and it's just about blowing up the next bubble. But this means they're going to be printing a lot of currency, and as the renminbi, the yuan, the Chinese currency, is getting devalued by stimulus, and Chinese citizens are going to be getting some, cash, some fiat currency as a result of this stimulus from the wealth effect as their real estate and their stock holdings are bid up into a bubble. What are they going to go to buy? They're going to buy gold, right? They're going to take some of that money and they're going to buy gold, and that's going to mean more demand for the precious metals. And probably around the same time, the U.S. consumer is going to wake up to what's going on, and they're going to want to buy gold too, and they're going to want to buy silver just like Chinese citizens. So that is a very bullish development for the metals. The ECB just lowered rates yesterday. Again, they eye more cuts as their economy is sagging, and of course their economy is suffering a lot because they've been cut off from cheap Russian energy. So what do the political elites and the leaders in Europe do? Well, they think that printing money will ease their problems, probably make it worse, but that doesn't negate the fact that that's what they're going to do. And really, rate cuts at this point are not an option for most of these central banks because their respective governments are so massively indebted, like the U.S. with, what do we have now? Almost 36 trillion in debt. If we look at the U.S. national debt clock here, 35.763 trillion in debt and growing. The only way you can pay this debt off is with devalued currency. So that's what they got to do. They got to print a lot of money to accommodate the growing levels of debt. And that's why Bank of America is telling people, yeah, you better get some gold because it's going to be the only safe haven left. What good does it do you to have a locked in guaranteed 30-year rate on a US Treasury when the dollar is being eviscerated, right? Like, yeah, you'll guaranteed get your money back. Sure, that's why it's a safe haven. But what if the dollars don't buy anything? That's the risk here. And so, that's why we're being warned by Bank of America. By the way, with Bank of America warning us that we need gold, I mean, you really should pay attention when a place like Bank of America is telling you that you need to stack gold, because like banks typically don't like to steer people towards hard assets. This is a competing asset to all the various investment products they manage. It's not in their interest to steer people to gold, but even at this point, they can't even ignore it, right? It's like when Ben Bernanke was being grilled by Ron Paul in congressional testimony, and he said, why do central banks buy gold? Ben Bernanke said, well, it's tradition, right? I mean, they've always got to run this campaign, this propaganda campaign against gold and hard assets, because gold and hard assets, they're real money, right? Gold and silver are real money. The bank's product is debt-backed fiat currency, so they don't want to promote gold. But here, so when you see banks telling you buy gold, it's a really serious problem. So the ECB cut, we're going to cut some more. This is the CME FedWatch tool for the 7th of November Fed FOMC meeting. Markets more or less at consensus now that we're going to get a 25 basis point rate cut at that meeting. Now, normally, I believe that the CME FedWatch is pretty accurate in terms of the Fed giving markets what they expect. However, with the election coming up, I think that this one could be a bit of a curveball. I don't know that necessarily I would trust what the markets are forecasting here. I think that it could be a wild card for us this FOMC. You might see a bigger rate cut. You might see no rate cut. Who knows, right? Because a lot's going to happen between now and the time of that meeting. But the bottom line, in the long run, everybody will be cutting more, and that's why gold is going to go higher. Here's another story about Costco. Costco has been carrying gold and silver bars as well, but now they're going to be adding platinum to the lineup. Now, I talk a lot about how silver is a massively undervalued asset, probably the most undervalued asset in the world at the moment. But if you want to talk about contenders, platinum is a contender for that position. Platinum, I think back in 2008, was worth twice as much as gold. It was the gold to platinum ratio was around 2. But now platinum is worth about $1,000. It's probably moving up today too. I haven't checked the price. Let's see, what is platinum at? $1,023. Sure, it's putting in a green candle, but gold's at $2,700. Gold's worth almost 3 times as much as platinum. So platinum is incredibly undervalued. And, it's interesting. Costco is talking about now adding platinum to their lineup. So is Russia. Remember this recent announcement that we got from the Russian draft federal budget, which tells us that their central bank and the state fund is now going to be adding platinum to their reserves and silver for the first time. So we are going to see silver, platinum, all of these undervalued metals. They're going to be the latecomers to the precious metals bull market. And that's another warning that gold is sending. Gold is the most recognized safe haven asset, I think. And look, here's the thing about gold and silver too. An interesting dynamic between the two is that when people are being defensive, investors are being defensive, they go for gold. But when investors in a commodity bull market are getting greedy, they tend to favor silver. That's why you see silver move towards the end. It's why at the peak of the metals bull markets, the gold to silver ratio tends to collapse, right? Gold to silver ratio right now is like above 80, very high historically. But in 2011 at the peak, collapsed all the way down to, I think, 32 or 33. In 1980, it collapsed as low as like 15. And that's because when investors are getting greedy in a commodity bull market, they go to silver because it's a smaller market, it outperforms, and now state funds, central banks are beginning to recognize silver potentially as a monetary asset once again. And it's like you want to stack silver before most people come to that realization. You don't want to stack after everybody views silver once again as a monetary asset, because at that point it's going to be too late. At that point you're going to have triple digit silver or much higher. And now silver is just an absolutely incredible, ridiculous value. And so, that's what I'm still focusing on. I mean, I like gold. I like gold backs. I like having, the option to lease out the gold backs. I like having gold coins and gold bars, but silver has always been my focus because it's just so clear that it is so massively undervalued relative to gold. I'd rather buy the cheap thing, personally, because I think at the end of the day, there's going to be a big payoff there. This is an interesting chart regarding silver. This shows the inflation-adjusted price for silver using the official CPI data, just the regular nominal US dollar price. So gold line here is the regular price, the nominal price. You've got this blue line here that represents the CPI inflation-adjusted price. So if you take the peak price of silver from 1980 of $50 and you adjust that for inflation, gives you a price over $200 using the CPI. But if you use John Williams data from shadowstats.com, that gives you a silver price of over $1,800 back in 1980 if you're talking about in today's dollars. And I'm pretty sure the Shadow Stats, all they do is they just use the original CPI formulation, so the one that hasn't been doctored to understate inflation. And this just gives you an idea that silver is probably not just going to stop at triple digits. And of course, ultimately, you say something like $1,800 silver, and inevitably you get people who come out and say, oh, this is ridiculous, you're a shill, you're just pumping. Like, look, I've never sold a single ounce of silver. SD Bullion doesn't care if I say silver's going up or silver's going down, right? This is just my opinion. They just, pay for the ads. That's it. Whether I say silver's going down, silver's going up, I don't have an incentive to convince people that silver is going higher. It's just what I believe personally, that it's going higher. And, none of this is financial advice. But there really is a possibility you could see 4-digit silver. And my argument to those who say that will never happen is, so what? You think the fiat US dollar is going to be like magic and just last for all time? Even though a fiat currency has never done that throughout human history, like 99% of fiat currencies that have ever existed are gone and worthless. But what? Silver is never going to be $1,800 in the current US dollar? I mean, come on. Now, yeah, it might mean if you have $1,800 silver, that the dollar isn't buying much anymore. I mean, that's probably the scenario. But I'm just saying that, $1,800 silver, you look at that and then you think about how the ultimate low price for the fiat dollar is zero. There's no bottom. Yeah, it's inevitable. Not only is it possible, it's inevitable. It's how soon are we going to get there, right? Are we going to get there in our lifetimes? I mean, that's the bigger question. But, $1,800, $1 million silver, it's inevitable. Like, 500 years from now, there will be no fiat dollar. That's guaranteed, at least not in its current form. So anyway, I think it's interesting, though, if we take a look at the 1980 highs. A lot of times people talk about the Hunt brothers when you mention that 1980 high. This is an article from SD Bullion. I saw Silver Dragons recently referenced this in an article, and I thought it was really good. I had not actually read this, or rather, Silver Dragons referenced this article in a video. But it talks about the myth that the 1980 $50 high was because of the Hunt brothers. I'm just going to read this to you. It says, it is a misconception or a twist of the truth at best, and at worst, a solid framing with public tar and feathers to follow for decades. These guys were not shrewd businessmen. They were more akin to trust funders who had warranted fears and thus took massive bets with capital their dad had created. Estimates are that some 12 billion ounces of silver existed above ground in 1980. That excludes coins, jewelry, and antiques, or rather rare coins. At their peak of buying, the Hunt brothers controlled about 250 million ounces of silver, combined bullion and futures contracts. The total represented about 2% of the world's then physical silver supply. Their physical silver bullion position was smaller than Warren Buffett's was from 1998 to 2006. But somehow the fallacy persists that three wealthy brothers in Texas cornered and drove the price of silver into a bubble in early 1980, which ultimately led to $1 billion US dollar bailout by the Federal Reserves and other commercial banks. While the Hunts contributed to the $50 US dollar an ounce silver price spike on January 21st, 1980. The critical question is by how much was silver's price rise contributable to their actions alone? And yeah, okay, so I just thought that would be interesting to read because I had just shown a chart of the 1980 silver price, and I know people are going to say, but that was the Hunt brothers, it's artificial. Well, look, I mean, that was a factor, but you got to keep in mind that gold in 1980 was also hitting a record all-time high of $850. So it's not like this was occurring in a vacuum, right? And yeah, I mean, look, silver is a very volatile metal. It moves more than gold at the peak of a market. And look, if you think that the Hunt brothers was a contributing factor to $50 silver in 1980, think of what it's going to be when there's a massive silver short squeeze or a currency collapse, a sovereign debt crisis, QE to the tune of multiple trillions of dollars. I mean, it's going to make the Hunt brothers thing look like a walk in the park. And so that's why I think you're going to see skyrocketing silver prices before all is said and done in these markets. I mean, just look at a couple other measures of the silver price today. I mean, yeah, John Williams Shadow Stats data, that puts us at over $1,800. How about the M2 money supply? So the M2 money supply was about $1.5 trillion in 1980. Today, it's at about $21.1 trillion. That's an increase of about 14-fold. Take the 1980 high of $50 and multiply it by, by 14. That gives you $700 silver, right? So just, by taking that price and modifying it with the expansion of the money supply. Or, if you're one of these Hunt Brothers people that thinks $50 silver from 1980 is just a number you can't use, how about the low price of silver from 1980? If you go to SD Bullion, they have these nice resources where you can get daily silver prices from any year. And if we go to May of 1980, you can see silver hit on May 22nd a low of $10.89. Okay, so using that number, take that number and multiply the low from 1980 by the expansion of the money supply, and you're still at $150 silver. So today's silver price is just incredibly low, and I don't know if we're going to $150. I don't know if we're going to $1,800 in the next couple of years. I don't have a crystal ball, but we're going a lot higher, orders of magnitude higher, I believe. And, that's my forecast, and I'm acting accordingly. I'm not telling you to do anything. I'm not telling you to go out and buy gold, buy silver, do your own due diligence. Of course, everybody's situation is different and all that, but this is what I am doing. Another way you can do it is you can take the debt from 1980, which was around $1 trillion. We're at $35 trillion, going on $36 trillion now. But let's just take that. It's a factor of 35. You multiply that by the low price of silver from 1980. That gives you $381 silver. And again, it's hard to say what the right price for silver is and why is it so low. I mean, is it manipulated lower? Is it heavily shorted by a number of these institutions? Yeah, that's true. Also, though, you got to keep in mind there's a huge propaganda campaign against silver, right? I mean, and it's not just about silver and gold, it's about the whole monetary system. I mean, they've gone so far as to redefine the word inflation over the past 50 years. If you get a dictionary from 1971, it's going to tell you that inflation is the expansion of the money supply, right? It's this stuff. But if you get a dictionary from today, it's that they define inflation differently. They say inflation is rising prices, right? And that's how you can get somebody like Jerome Powell, the chair of the Federal Reserve, who massively expands the money supply and then acts surprised when there's high inflation. What did he say in 2022 when inflation was peaking? Even according to the CPI, over 9%. It's much higher than that, really. But he said, now we understand how little we know about inflation. Do you really think that Jerome Powell doesn't understand inflation? Do you really think that Ben Bernanke thinks that central banks hold gold because of tradition? No, I mean, it's a propaganda campaign to support the debt-based fiat system that we exist in, right? That's what allows them to run up a $36 trillion debt with $200 trillion in unfunded liabilities. And the American people just say, wow, it's weird that everything's so expensive, so strange that inflation is out of control. But that's the situation we find ourselves in. So what can you do? You can stack metal. You can take advantage of artificially low prices, and you can get your hands on physical assets. And that's what I'm going to keep doing. I'm going to keep stacking. So to wrap things up here, gold, record all-time highs. Silver, today, if we get a close here, I guess we could get a smackdown before markets close this afternoon. But if we stay where we're at, it's going to be the highest price for silver in over a decade, and they're going much higher, ultimately. I mean, there's going to be volatility, there's going to be ups and downs, but the system is guaranteed to implode at some point. It's just mathematics, and you even have Bank of America telling you as much now. Not in so many words, but again, you're never going to get the straight story from a central banker or a banker in general, but they are starting to have to pay attention to what you can't ignore. And, that's how it's going to be moving forward. But anyway, thanks for watching, everybody. Stay safe and happy stacking. Let me know what you think about all the topics we covered in today's live stream down below. And I will catch you next time. Stay safe and happy stacking, everybody. Smart Silver Stacker out.